G'day, Ryan.
Hey, Woody, how you going?
Good, man. I've been trying to get you on a video for the Insider in a long time, and I did hit you up last week, but we had our editorial gathering a week ago, which was a really great day, actually.
Yeah.
Long time coming. And I think we all got something out of it.
It was really good, actually. I really enjoyed it. It was good catching up with people for a start, because I've not seen most of them for 2 years. But the interesting part for me coming out of that editorial meeting, and I wrote about this in Money Morning this week, was despite all the doom and gloom out there, a lot of us are actually fairly positive on the future, especially for Australian investors, which was really interesting because, look, I'm generally pretty positive and all my stuff is generally positive, but it wasn't just me seeing that positive future. It's people that, are more sort of stoic, like Greg Canavan was, seeing some really exciting stuff for not necessarily the kind of stuff I look at, like speculative ideas, but, blue chip companies that are, looking cheap. Catherine Cashmore came out with the most interesting idea of the day, which was mining the moon.
Yeah, and that's going to be our next issue of Cycle Trends and Forecasts. Yeah. But you're right with Greg. I mean, his one, he basically summed it up with one saying, it's the age of Australia's coming. Yeah. That's a very positive story.
It was awesome. And look, and that fed into some of the stuff Selva, our energy expert, was saying about how renewables are, actually really materially intensive. Like the amount of materials needed to do this transition to like a renewable energy economy is really good for Australian miners, and it sort of made me think of some sort of interesting investment ideas for Exponential Stock Investor. And me and Ryan Clarkson-Ledward were talking after that on areas we could start looking at for that service.
Yeah, right. And Brian too. So I did the book. Brian Chu and I. Brian's the gold expert, and we did our Bullion and Bordeaux hour yesterday. And we always call it the Bullion and Bordeaux hour, but we always run to about 2 hours. Probably the wine that we drink while we're chatting. But yeah, I don't know. I get the sense that it's the same. He's very positive too, even though the markets at the moment, they're at the point now, and Brian made a good point. Obviously, his focus is gold, yours is crypto, but there's a similar dynamic going on. He's accumulating now. The gold explorers have been pretty much crushed more than any other market, and he reckons closer to the bottom than ever. And he's accumulating for the anticipated bull market ahead. And that's why I wanted to get you on today, because we're seeing the same thing in the crypto markets. And I thought it would be really interesting and valuable for our readers of the Insider to perhaps go through your presentation that you gave on Thursday to us all. I mean, we're called the Insider. The whole point of the Insider is that you're getting an inside look to what we're discussing. Yeah. So there's no more insider than this. So I figured we can start. And you're probably, I don't know if everyone can see the screen. It just says 13 years ...
Yeah. All right. So this is the presentation I gave to my fellow editors, and I should say that not everyone is a crypto enthusiast like me in the company. There's some people who are fairly skeptical, some people that are interested but maybe not convinced, and then there's other people that
Well, our biggest skeptic wasn't even there.
Maybe that's why the mood was so buoyant. But yeah, look, like you said, Brian Chu, who's the gold expert, he sort of acknowledges that there are similarities between what one of the main functions of crypto are and what one of the main functions of gold are. And essentially they're about holding central banks to account, or holding the existing monetary system to account. And for a long time, that was what gold's job was. And anyone who knows history knows that in the 70s, when America took themselves off the gold standard for good, gold went nuts because investors said, well, we need another asset to try and keep you honest. And that's how gold worked for a long time. In my opinion, it doesn't work so well on that front. And if you look at the price of gold over the last 10 years and some of the most tumultuous monetary times we've had, the price of gold's pretty much done nothing. So I think, and I have no proof of this, and I did ask Brian some questions about this at the presentation, but I think that gold might have been captured to a large degree. And I think that what Bitcoin specifically does is it's designed in a way to avoid that capture, that regulatory capture. You can't have a huge paper market for Bitcoin because everything's on chain, everything's transparent. So it's very hard to play the sort of funny games that I think people play with gold, to do that with Bitcoin, for example. So yeah, like you said, I gave the presentation on cryptos in general to the team, and I'll go over it now if you don't mind. I'll just run through it. So 13 years is like, obviously Bitcoin started in 2009, which 13 years seems like a long time perhaps, but it's actually a drop in the ocean of monetary history. It's a minute amount of time. And let's be honest, probably most people had never heard of Bitcoin or crypto till maybe 2017, late 2017, when we had that huge bull market and it sort of came into public consciousness.
There is a caveat to that. This again, it was a fat tail idea. It's why our business is called Fat Tail Investment Research. In October, I believe it was July 2013, we published an issue of Revolutionary Tech Investor, which talked about Bitcoin and the new evolution of digital money. So we did. I just wish I bought it, to be honest.
Look, I know this, and I remember Sam Volkering, I think, wrote that, didn't he? Because I remember when I joined the company in early 2017, when we launched a crypto service in early 2017, so before the big bull market, Sam told me he'd been trying to convince the publisher at the time for years to run.
And it took him 4 years,
And it took him 4 years to convince him. And, that's sort of if you think about our company, we are on the edge of these ideas. And for a long time, that was probably even too far away for some of our previous publishers to get on board with. But, Sam did manage to convince the publisher, probably at a good time, because a lot of people did see some good gains in that year. But with crypto, you get these massive bull runs and then you get these down markets. And it's a free market. There's no government regulators stepping in or supporting you. It's a buyer beware. You take your own risks and you have to handle some immense volatility. So the first slide I shared with everyone was a bunch of memes, because what crypto people tend to do in these bad times is create memes to sort of use humor to help themselves deal with the drawdowns. But the first one I think is quite funny. Said, "Who said crypto was stressful?" It says, "I'm 25 and I feel great." And obviously, this guy's looking pretty old, which is, I'm only 25. I'm actually 42. Would you believe? The other one here is a Pablo Escobar meme, which is quite famous, which is Bitcoin holders just hanging around waiting for coin market cap, which is where a lot of people check prices, just looking at the prices day in, day out, and just waiting for prices to come back. So that's one. But my favorite sort of bear market meme is this one, which is, obviously Mel Gibson talking to Jesus Christ and saying a stock market guy explaining his losses to a crypto investor, And as I said to the team, I said, yeah, you guys might be having some losses, but, don't tell me about it. I'm getting smashed here. So, and that's a pretty funny one. But in saying that, look, I'm using humor, and if it tends to be the way, right, is people get interested in bull runs. They get interested when the price is soaring and everyone's talking about it, and people come on board, and this happens with my service. And I always hope that this is not just one of these bull run cycles. I always hope that this is actually a tipping point where we're going to move to the next stage where this goes mainstream. But what tends to happen more often than not is things get overhyped in regards to where the technology is at, and you get these downturns. And the downturns seem bad if you buy at the top of the market, but if you take any step back, if you've been invested in Bitcoin for longer than a year, for example, then you're in the money. If you've been invested for 2 years or more, you're making better returns than any other asset class in the world. And if you're invested for longer than that, you're making ridiculous returns. And that's been my experience as someone who's been in crypto for 9 years. When I first got into Bitcoin, I bought in, I think about $600 was my first purchase of Bitcoin back in 2013, 2014. And it'd come down from $1,000 to $600. So I was thinking, well, this is a nice, this is a nice pullback to buy in on. And I was excited by it. And I was reading up on it every day. And I was listening to talks by people like Andreas Antonopoulos and immersed myself. And I was like, this is the future of money. And it's only $600. I'm going to buy 6 of these and just sit on them. And I kept on putting any spare cash I had into it. And then it dropped to like $150 per Bitcoin, and it stayed down there for 2 years. And even someone who was pretty enthusiastic about me was like, maybe I've got this wrong. I kept on buying little bits when I could. But you sort of have to go through that bear market, and if you manage to survive these bear markets, you position yourself, because you take time to understand what you're investing in. You're not just chasing a market higher. You take time to understand what's important about it. And that allows you usually, if you do start to understand it, to put some more money in and think about it as a serious part of your portfolio, not just like a speculative punt. You know what I mean?
By the way, that's true in the stock market too. Greg and I often talk about this, and Greg always says this. He says you haven't really have proper experience of investing unless you've lost some real capital doing it, because that's what actually teaches you how to do it properly.
It's a brutal truth. The worst thing that an investor of any sort is to be lucky on their first attempt, because it's just human nature. But you mistake that luck for a skill, and you end up investing a lot into your next idea, probably more than you should, because you think you know it all, and eventually the market teaches you a lesson. And I've gone through that experience myself. I used to trade my own capital for 3 years, and I came from a long history of working in financial services and investing markets, and I thought I knew what I was doing. It was only when I was trading my own capital for 3 years that I realized I don't know as much as I thought I did. When you're actually living off the fruits of your own profit, that's what really teaches you how markets really work.
Final point on that, that's exactly what Brian was saying yesterday. I mean, he's been invested in the gold market for 10 years now. And especially with explorers and specific developers and producers, the gold market is brutal in that same way. And everyone sees gold as having long-term, cyclical bull runs, but the stocks within the gold sector, they're mining companies and they have balance sheets and they go through their own brutal cycles, both up and down. But that's what taught Brian what to do too.
Yeah, look, I liked Brian's presentation because he put that in context, didn't he? Like, everyone says they want to buy when things are cheap, but when they are cheap, everyone's too scared, and that happens in every asset class. About gold, cryptos, stocks. Look, I used to be a financial advisor, so one of the most important takeaways for me in that role for 7 years was seeing how human emotions worked on everyday people. And the unfortunate truth, and I know Greg wrote a book on this as well, is that we are hardwired not to make the right decisions. And even today, I sometimes have to fight my own emotions to make the right decision, or to try and make the right decision for subscribers, because it's a very strong instinct to run away or to get out when things are bad, even though any investor, like Warren Buffett or any famous investor will tell you, when everyone's scared, that's the time to get in. And it's a cliche, everyone says it when there's blood on the streets. It's a cliche, but it is true. The caveat to that is you're never going to pick the bottom in that market, and you have to need to know why you're investing, what you're investing in, and why, and what are the things that are going to make that come back later on. There's no point, saying, "Oh, I'm going to buy this beaten down small cap miner because it's down," because it might go to zero. You have to understand that. But it comes down to knowing the asset, right, and doing your research. Yep. Because looking at the chart you got on screen at the moment, for example. Had you just bought tulips at the bottom, well, you'd probably be still poor now, wouldn't you? Look, and I started with this slide in the presentation, and this says, 13 years and Bitcoin and crypto are still with us. And you hear a lot of this criticism in the mainstream that, it's a tulip bubble. So I thought I would show a presentation on actual bubbles to start off with versus Bitcoin. So this on the left is the price of Bitcoin on a log scale. So that means it's going up, exponentially. It's not linear. And the yellow line is Bitcoin. And you can see that, the price over that long term is moving steadily higher on a log scale. So it's not crashing and burning. If you look at the purple line, there's your tulip bubbles, someone sitting on a big pile of tulips in their attic that their great grandma left them that are worth nothing probably. But that really 2.5 years. You've got other bubbles.
A fungible asset.
Yeah, I know. I don't know why anyone would think that is true, but again, that's human nature. I think they wrote, there's a book called The Madness of Crowds, which explains why bubbles do exist. And bubbles are, irrational. Bubbles do exist. Don't get me wrong. I don't say they don't. But the South Sea Company was another famous bubble in history, the blue line. And then they've got here the NASDAQ, the .com bubble from 1994 to 2003. And that lasted, 8.5 years. But you could argue that wasn't a bubble either, because think about what have been the best performing stocks over the last 10 years. And, despite the pullbacks of the last year, tech stocks are where to be, and a lot of famous investors like Warren Buffett missed out on that run. They didn't buy into Apple until, 10 years after it had already started making its moves. They didn't buy into Netflix. They didn't buy into Facebook, things like that. So technology does surprise people. And I read a quote the other day that says, it was from Mark Zuckerberg actually, and it said, the biggest risk in a world that's changing fast is taking no risk. Because when the world's going to change, taking no risk means you're going to miss out on the product of those changes. And cryptocurrency is very much like that. I've never said, chuck all your money in crypto, but as an educated part of everyone's portfolio, it should be in there in some proportion, whether that's 1%, 2%, 5%, or whatever. That depends on the person's risk appetite, but it should be a part there because it is technology. It does have an immense amount of human capital behind it. It isn't dying away despite what you hear. And in my opinion, it will be inevitable. It's just that the volatility along the way tends to shake people out. And whenever we have times like we have now where it's down, even though, like I said before, over any meaningful time frame, it's doing brilliantly, you get all the critics jump on every pullback as if it's the end of the world and it's going to die. And it never does. So we've still got Bitcoin at $30,000. 2 years ago, it was down at $3,500. I mean, come on, that's a pretty good return. And what I think you're seeing, as I'll show on this next slide, is with cryptos, what you're seeing is adoption. This slide here compares the adoption of the early internet, which is the white line, with the adoption of cryptocurrencies. And you can see that the orange line tracks that white line very closely. So we have, last time I read, there was 300 million people owned cryptos worldwide. And that was from a very low base. And that's growing strongly every year. People are interested despite the volatility. They still want to know what this is. And it's tracking the adoption of how the internet was adopted. And people forget this, right? But in the early days of the internet, people said the exact same stuff as they're saying about cryptos now. They said it was a fad. There's a famous quote, a famous newspaper article saying this is just a passing fad. And this was written in the year 2000, by the way. So this wasn't the early 90s. There's the famous quote from Paul Krugman, who's a Nobel Prize winning economist, a smart guy we've all got to listen to, who said that we'll find that the effect of the internet will be no greater than the fax machine. And that turned out to be a ridiculous comment. But the other thing is we also saw people who are experts in technology underrate the effect of the internet as well. Because even for people immersed in technology, trying to work out how complex systems evolve is almost impossible. And that's what blockchain and cryptocurrency projects are. They're complex systems made up of, these days, millions of people with human capital, with brains, looking at this new technology, which does allow something that couldn't be done before to be done, and trying to see how can they create value from that for other people, or how can they create valuable projects. So I think once you realize, one, it's not a bubble, and two, the pace of adoption is pretty much the same as the internet, then you realize there is something to this, and is something you should probably, if you're a long-term investor, start to understand. And this is a busy slide, I suppose, but there's lots of adoption all over the place. There's countries adopting it as legal tender. Andreessen Horowitz, just a week ago, raised a $4.5 billion crypto fund on the same day, coincidentally, that the European Central Bank chief, Christine Lagarde, said that crypto was worthless. So I think I asked the question to my colleagues, who's got the better track record in technology? One of the most famous tech investing venture capital firms of all time, who's just going to chuck $4.5 billion in it, or Christine Lagarde, a bureaucrat, technocrat that's never created a dollar value in her life. That's a philosophical viewpoint from me, but I think what I'm saying is people who understand the technology are putting money in it. People who are threatened by it are trying to steer you away from it. So that should probably give you some clues. You've got 27 public companies, so listed companies in the US who have Bitcoin on the balance sheet. I won't go into this one too much, but I'll look at a bunch of on-chain metrics because the blockchain is very transparent. So you can actually look at it to get the source of truth. And that shows something like 68% of Bitcoin holders haven't moved their Bitcoin for the last year. So despite the price volatility, the ups and downs, there's a really strong base of what we call hodlers, Bitcoin hodlers, who are saying, well, I don't really care about the price. I'm in this for the long haul. And as that illiquid holder metric moves higher, that means the supply of new Bitcoin available to buy shrinks. Yep. So if we ever do see a demand surge, then we will see the price react very strongly because of that illiquid holder base. That's a very important sort of price dynamic that never gets talked about. Behind the scenes in the technology, there's something called the Lightning Network, which is the layer 2 technology on top of the main Bitcoin blockchain, which is growing exponentially. And this is the kind of thing like companies like Strike and Block, which is the old Square, they're building payments apps and payment systems on that. And a lot of them are going to go live in the next 12 months. Some are live already. But a lot of them are going to go mainstream in the next 12 months. And what they allow is they allow people to make payments, not just of Bitcoin, but US dollars too, and in the future, Australian dollars, from say me to a shop or to a retailer or to another person, almost for free. Now, that's a big deal, especially in a world where we've got inflation running at 8, 9, 10% at the moment, because a lot of small businesses especially pay up to 3% in payment processing fees. So that's 3% that the current financial system just takes a cut off for allowing people to make payments, which is ridiculous. Networks like the Lightning Network are going to bring that cost down to near zero. And so And essentially, that's taken this 3% tax out of the economy. And there, big companies, even like say McDonald's and Walmart, they still pay 1.5% for a processing fee. But because they have so much revenue, they have so many transactions, that's a huge cost saving for them. So I know a lot of them are going to look at ways of integrating that technology just purely because it saves them money.
To put it into just so that people can really simply understand it. So, because I know back when the internet came, that was hard to see how that was going. But if you actually look back at the internet over the last 15, 20 years, you got layers of the internet being built on top. So, for example, just take the NBN network. Do you know that makes the delivery of the internet speeds a lot faster. So you remember you had the original dial-up, which took about 5 hours to load a page on. When you look back in the day, and then suddenly you get like a fiber optic cable or something, and then you got your upload speeds have just tripled. Do you know what I mean?
Yeah,
if that's what we're kind of looking at. It's the layers to make things cheaper and faster.
Is exactly right. So you got this base layer. I'm talking about Bitcoin specifically, but you got this base layer which is decentralized, open source. Anyone can tap into it, use it in any way they want. No one can stop you. You can do it really cheaply, but it has some limitations because it prioritizes being a decentralized network that no one can control more than anything else. So what technology people are doing is they're building layers on top of that, exactly like you said, for specific use cases, to make things faster and cheaper, to allow smart contracts to be done, to allow more complex things to be done. And that is exactly what he said. If you think from that layer, other layers come on top, which increase the use cases and increase the adoption. And that's exactly what's happening right now. And it's just like the internet. First people are like, what do I do on this? I'll play chess against someone, but what else can I do? And over time, it's ubiquitous. And say, for example, right now we're recording this over Zoom, over the internet. Everything we do in work is over, some sort of internet channel, how we communicate, how we manage workflows. We don't even know we're doing it, but we all use that. And I want to reiterate this point. 20 years ago, people were saying there'd be no use case for the internet. It sounds ridiculous now, but that's where we were. So I think just always remember that this technology has heaps of capital in it, heaps of human capital, some of the smartest technology people in the world working on ideas every day to make this better and to improve it in whatever way. So even the problems they have, I heard a quote the other day from Mark Andreessen, the head of Andreessen Horowitz, who said, when people see problems with blockchain technology and say, oh, it won't work because of this, or this, or this, technology people and venture capitalists look at those as problems to be solved to create valuable businesses, which is the exact same process as the internet happened. And he obviously made $2 billion from investing in .com companies, and he'd never compared crypto to the internet until like a couple of weeks ago. He said, for the first time, I'm going to say we're at the stage where I can see this being the exact same trend as the internet. So,
and while you got the technology side of it, you got the financial side of it with the big Bitcoin ETF. That's when actual funds can start investing in it easily.
So one of the things that are slowing down, sort of mass amounts of capital, institutional capital come from going into Bitcoin or crypto in general, is regulatory uncertainty. They can't just put money into Bitcoin. They can't just download a Bitcoin wallet and chuck some money in there. They have to do stuff, in a very specific manner to make sure they keep their financial services license. And the US has been stalling on a Bitcoin ETF for a long time, a physical Bitcoin ETF, so one that actually has to hold Bitcoin. They do have a futures Bitcoin ETF approved, which seems strange because that's actually a lot worse in terms of the costs for individual investors, because it's paper Bitcoin, it's not real Bitcoin, and there's costs attached to that. But there's been a lot of companies in America trying to get this Bitcoin ETF approved, and the regulator has been pushing back against it. Now, interesting news just from this week was that Grayscale, which are probably the biggest fund that just holds Bitcoin, so they're not an ETF yet, they're a fund, but they want to become an ETF. They've just hired an ex-Solicitor General of the US to push the case for a Bitcoin ETF to be approved. And one of the legal experts I follow says this is like getting the big guns out, saying to the SEC, if you don't approve this, if you keep on denying this on spurious grounds, then we're going to sue, basically. We've got the ex-Solicitor General of the US, one of the top lawyers in America. So you can see how far, this is going to go. And the thing that's important about a Bitcoin ETF being approved is once it is approved, it allows this institutional capital to start investing in Bitcoin. And, I'm not saying people will do this overnight or en masse, but the way that portfolio managers think is they think of having a diverse allocation of assets that are non-correlated and having some allocation to a Bitcoin through a Bitcoin ETF, through a regulated product, will encourage some of them to start doing that. And you're talking about so many billions, potentially trillions worth of capital that can suddenly have the option of investing in Bitcoin. So it could be a real game changer. And I know that July the 6th is the next date where the SEC has to make a determination on this grayscale application. No, will they say yes or no? Who knows? But if they say yes, then that's going to be a big day, the day after my birthday. So it'd be a good birthday present for me if that happens. If they say no, though, I think what we'll see Bitcoin companies saying that there are no grounds for this and we're going to start to sue. So watch that space. That's all I'm going to say on that. Right. I think I went over a bunch of other signs of adoption. So like I said, you don't hear about this in the mainstream, but there are banks in Switzerland using different crypto portfolios for borrowing and lending. You're seeing a lot of banks in the US setting themselves up to be custodians of cryptocurrencies, so allowing their customers to buy and sell Bitcoin and hold it for them. One fact that people might not know is that cryptocurrencies are really popular in the millennial age group, so people from 26 to 41. And if we think about the broad demographics changes in the world, we're moving from a world led by baby boomers deciding on what assets are important to a world probably where millennials will have more influence. They're a huge voting bloc for one, but they're just a huge group of people. Probably, I'm Gen X, so I'm sitting in between. You're probably Gen X as well, Woody, but we're sitting in between these baby boomers who've made decisions for the last, 20 years. And suddenly we're going to get these millennials underneath us starting to make decisions. But, they love crypto. They're into crypto. They understand it. They've grown up in this volatile asset world and it hasn't shaken them. They love it. So their investment decisions are going to drive adoption of Bitcoin. And as a voting bloc, that's pretty important as well. And there's a lot of more stuff I could have mentioned on this slide about adoption all over the place, especially in developing countries. That's a very important point. This Bitcoin and stablecoins are allowing people in authoritarian regimes to protect their money from governments that are not as transparent or open as ours. So this adoption is happening all over the world. It's not going to slow down, like I said. And I think people need to sort of not ignore what the mainstream says about it, but always take a pinch of salt, because you are disrupting a current financial system which doesn't want to be disrupted. And they're very powerful people and they like to sow the seeds of doubt. But behind the scenes, like the internet, the technology is not slowing down. So,
but it's I was just watching an old Milton Friedman Free to Choose thing. When was it? I was watching it last night. I came across it on YouTube, and it was the 10-minute segment on inflation, and he was talking about Gresham's law, that the bad money drives out the good, and that's kind of what is eventually going to happen. You'd think, right?
Well, you're right. That's a good point. Yeah. So let's think about it this way. There's a lot of people writing a lot of opinion pieces attacking the crypto industry. And ultimately their fallback is that the government should ban this in some way. The government should stop this. Now, if we think about a world of free markets where rational individuals can choose what they want to do, if you let an alternate financial system compete with the existing one, then whatever is the best system will win out. And is that not the way it should be? If you're resorting to the argument the government should protect us, protect our little fiefdom, you're already admitting that you're scared that this alternative system is going to win out. And I think that's what's happening. The people who have power, they know that give this enough time and people are going to prefer it, because one, why would I not want to pay less money? Why would I not want to have more access to financial system? Why would I not want to save my money in a currency that can't be debased or printed at will? Why would I not want to be a self-sovereign individual? No, some people might not want that.
Why would I not want to send someone some money without paying a little snip to a middleman?
Correct. Yeah. Why wouldn't you? It's a no-brainer. So, of course, people who have power or influence or prestige even in the existing system, they hate this thing, because in this new world of it doesn't matter if they know what the Reserve Bank are going to make next week, what decision they're going to make, and they can't talk about it. It doesn't, they can't make money from being closer to that money spigot than the rest of us. They have to make money in a free market, which, unfortunately some people don't want. So I think, I don't think a free market like this with such popular support can be stopped, but it can certainly be slowed down, and it's going to be slowed down by the people with the most to lose, which is the current financial system. So just be aware of that dynamic. These changes don't exist in a vacuum, and this is the story of every technology. I think I wrote a piece to subscribers the other day saying back 100 years ago or whatever, or maybe 60 years ago, there was a law passed in America called the law against margarine, and it was against margarine because butter dairy producers were scared that people would take this low cost alternative to butter. So regulators in America actually passed this law against margarine to slow down the margarine industry. So incumbents are always trying to slow down something that's going to cost them money. This is not new. This is how the world always works. So, and then, this is what the next slide was about. Mainstream remains highly skeptical. There's a lot of misinformed things about what Bitcoin is or what cryptos are. And they want it to fail. And that does scare certain people. All I would say is take a lot of what you hear in the mainstream as a pinch of salt. Some of it is what I would say is honestly ignorant. Just, journalists got told to write a piece and find a bit of information. Some of it is maliciously ignorant. So that is, people who are in power that don't want their power to be changed. And I think some of it is just bitter. I know a lot of people that have known about Bitcoin and crypto for a while and haven't invested because they thought they were smarter than the market. And it must really annoy them to see the prices going so high and not own any. And there's a lot of people in finance even who I think are just a bit bitter about this and want it to fail just for that reason, which is pretty sad. And I think from my perspective though is, like I said, I've been in this for 9 years, and I want, if crypto does succeed, which I think it will, I want as many ordinary people to have a stake in this as possible. A small stake, whatever it happens to be, but a little part of their portfolio, because I want this future financial service to be as decentralized as possible, and I want as many ordinary people to own as possible. To me, it might almost be a failure if all the ordinary people get shaken out and it's left to a new hierarchy of powerful people controlling this. That's probably a failure of the decentralized revolution if that happens. I don't want the big banks just to do the bait and switch where they tell you this is all rubbish while at the same time they're buying it up and buying the important protocols. I want as many ordinary people to partake in that. I know I'm not going to get everyone, and I know I might only get a minority of people to agree with me on this, but to me, it's important that I at least try, because I don't want, 5 years from now, people say, oh, I wish I'd known about it. Our job is to let people know about it, assess the opportunity, determine what level of risk they're comfortable with, and then I can help them look at where the best places to invest. And look, a lot of this, and I'll say this in my service, a lot of this is ignoring a lot of stuff in crypto, because there is a lot of bad stuff in crypto. There's scams, there's just bad projects that don't make sense. And a lot of this stuff I try and concentrate tries to filter out a lot of that noise and provide a sort of curated approach to looking at this. And, I might miss out on the latest shiny object in crypto. I don't really care about that. I only care about making sure I'm doing my best to put people in cryptos with real potential, not just because they're going up in price or anything like that. So that's sort of my approach. And this was this little chart here. We might finish off on this chart, but this was one that resonated with some of my colleagues who come from a financial background, because this I was trying to show that people that have some, say, Bitcoin in their portfolio, just as a small percentage, how it can enhance your portfolio returns over time. So this example here is if you had your typical, 60-40 stock bond portfolio, and you injected this 5% of Bitcoin into it, and you'd done this in 2017, right at the height of the bull market. So I'm not talking about buying in at the low and being smart. I'm talking about getting in 2017, just before we had like a 2-year crypto winter where prices fell down. If you'd put 5% of your portfolio in that then, and you compare that, which is it's the orange line, you compare that against the blue line, which is just your typical 60-40 stock portfolio, you can see that the Bitcoin enhanced portfolio has done a lot better over time. And that is taking the worst time to buy in and matching it today, which is a bit of a downturn. So, if you compare a bull market with a bull market, this would look even better. But it shows you that this is sort of the stats on that. It shows you adding a 5% little kick to your portfolio would have added, an extra 2.5% to your annual return, which on, say, $250,000 invested would have made you an extra, I think that's almost, $40,000 or whatever. So it's real money. Like, people have made careers on eking out an extra percentage or two over the standard.
And all you had to do was fine.
Yeah. And what I'm trying to show here is that adding 5% Bitcoin would have made you more return. But here's the important part that people would never tell you. Doing that, adding that to your portfolio, you would have made more money with less risk. And I'm using what the finance industry does as a definition of risk, which is something called the Sharpe ratio, which is this figure here. The closer you are to 1, the less risk you have. So you can see the traditional portfolio has that Sharpe ratio of 0.395. The Bitcoin enhanced portfolio with that 5% kicker would have done it on 0.553, which is closer to 1. So it's a better return for less portfolio risk. So when you look at your overall portfolio.
And less of a drawdown too.
On less of a drawdown as well. So your max drawdown under the traditional portfolio, at one stage at the worst of it, you would have been down 22.6%. With Bitcoin, at the worst part of that overall portfolio would have been minus 17.39%. So this might or might not resonate with someone watching this at home, but I'll tell you who this will resonate with. It will resonate with portfolio managers who have to allocate money in big portfolios like superannuation and things like that. And that's why when we talk about the Bitcoin ETF being important, this is the kind of metrics they'll look at. Because if they can eke out 0.5% even for less risk, that is an asset they want to know about. And so if adoption of Bitcoin continues as I think it will, these figures are actually only going to get better. And that is going to draw in not just your speculator, your individual investor like us, but it is going to draw in that institutional capital over time. And I think, this might take longer than what I think. It might take 2 or 3 years for that to start happening. But with a Bitcoin ETF approved, if it does happen this year, that is going to, definitely be on the path we're on. And once that institutional capital comes in, then that is very sticky money. And I think before I talked about that, liquid holders of Bitcoin is already very high. Imagine you get funds that are investing money for, 5, 6, 7 year time horizons, putting money in Bitcoin and soaking up that supply. You could have this perfect storm. And look, I'm not saying this is definitely going to happen. And I know, like I said before, there are powerful people pushing against this, but that is left to a free market. I think that's what would happen. That is the dynamic. To me, it's just a question of how long can they stall this for? Will it happen this year or will it be next year? But for the individual investor, again, times like this, these downtimes are the best time to start taking a position, thinking about how much of my portfolio can I risk in Bitcoin, say. And I say Bitcoin because if you're new to any of this, Bitcoin is pretty much the only crypto asset you should look at. If you want to get deeper, then that's fine, but you start with Bitcoin first and make sure you understand that first. And, obviously in my services, I look at different altcoins and other opportunities. But you need to have that base of knowledge. And that's why I try and help people, on that journey, because that's how my journey into crypto started. It was 2013, 14, Bitcoin for 2.5 years, then Ethereum, and then a bunch of altcoins from there. But it was only from understanding those first 2 things could I understand the risk and reward for the other things, if that makes sense.
Awesome, Brian. Ryan, sorry. Been talking to,
too many Brian's and Ryan's.
Consecutive days. That's really good. And it's kind of why I wanted you to thought we could go through this today. And if for those of you watching, write to me, letters@fattail.com.au and tell us what you think. We are working on evolving Ryan's service, and we're going to have some more details of that. It's just really exciting what's coming, and the key thing is to use this time to actually look into it while prices are down, because I just know from my own experience that's the best way to do things anyway. And we know that from the 2018-19 crypto winter, just as we know in all other asset classes, the time to get interested is when everyone else is not interested. So that's what we're going to try and do. We'll have more details on your thing coming up. Hey, Ryan?
Yeah.
Don't have to give any details now, but it's just saying we're working on lots of things in the background, and we should have some stuff coming up.
Right. Look, I think given what I've said in this presentation, it's my strong feeling that this is going to go mainstream faster than what people think. And so what I'm trying to work on, I'm working with people in the team around this, is how can we provide an avenue for people to incorporate this as a part of their everyday, as their mainstream portfolio. Time to get serious about this. We're past the stage where this is a speculative, casino and all that stuff. Although there's still aspects of that, don't get me wrong, the stuff I'm looking at within the crypto ecosystem is the backbone of a new financial system, a backbone of a new monetary system. And these down markets are the time to start understanding why that is, and to start, thinking about how you can position yourself for that. Even if I'm wrong, taking an educated speculation with part of your portfolio is part of what investing is about. If you wait for things to be 100% certain, then the opportunity to invest is well gone. You have to sometimes take an educated speculation as with a level of risk that you're comfortable with, And these times, these down markets when no one's interested and no one's talking about it and people are even attacking it, they're the times to learn about it. I don't know if we can do this, Woody, but I might share a few books that are worth reading. I won't share them now. Maybe we can put them on your note when we put this out. But there's a few books that are worth reading if you want to understand the economics of Bitcoin or how it works. A few ones that I started off reading, 8 or 9 years ago, that really just give you that background information. Because the unfortunate thing for me is that the mainstream are not very good at providing honest information on it. They take agendas and they're a bit one-sided and they're all about hyping up the fear in times like this. And when things turn around, they'll hype up the greed as well. And they don't play that middle road because it probably doesn't sell advertising space. But I'll give you a few recommendations on books that are worth reading in this time. And look, the new money investor service we've got, which is the entry-level service, and it's pretty cheap. I don't know what's that, $99 a year. We've got a lot of good starting material in that service too, if anyone's interested.
Cool. I'll provide links in the introduction to this video. No, thanks, Ryan, mate. That's been awesome. And I hope you enjoyed this at home. And like I say, drop me a note. If you'd like details of those books, tell me as well. Letters@fattail.com.au. Chat soon, mate. Thanks, Ryan.
No worries. Cheers. Thanks, Woody.